So let's have a quick look at how the Q2 FY21 updates are coming in, and they seem like they're showing some early signs of rebound recovery which is coming in, and most of them have been better than what the street was expecting, or what the recovery seems to be better than what anyone was expecting it to be. Now, starting with the FMCG space, we start with Marico, which said that 90% of its portfolio registered a volume growth, and the outlook also given by the management is very positive for the next year, is what they are saying. So positive signs coming in here. GCPL also said that they are expected to deliver a low double digit growth is what they were expecting in India. So again, that is something that is interesting. A double digit growth. Last quarter was very tough for most of these companies. Volume growth was almost negative. So obviously when you're showing good signs of recovery, it is obviously that you're recovering from such a tough time is very positive for the companies. Now, Titan also, where jewelry business accounts for around 80% of their revenue, they said that the jewelry saw a very good recovery rate, and a good recovery rate of around 98% is what the company has said, and the overall performance of the company is better than what the street was expecting. Even the stock rallied as much as 4%. So this is surely showing that what people were expecting, it's better than what people were expecting. So that's why we saw the stock also rally a bit better. And 98% recovery in such a tough time when consumers are not spending much for jewelry, it is very positive sign that seems like consumers are now getting out and going out and spending on what they need to spend. Discretionary spends also maybe seem to be coming back. Now, talking about NBFCs and banks, Bajaj Finance, they said that they'll continue to accelerate the provisioning for COVID-19 in Q2 FY21. As well, they'll further strengthen the balance sheet. So that is surely positive. HDFC Ltd, they said that the trends are indicated that the business is reverting back to pre-COVID levels. So that is obviously showing that we are recovering. There is recovery signs which are seen there. HDFC Bank, very strong Q2 update coming in. The stock also rallied on that day when we saw the Q2 update come in. The loans grew by 16%, deposits were up by 20%. So very positive Q2 update by HDFC Bank. Even IndusInd Bank saw a strong Q2 update. Deposits grew by 10% while advances were up by around 2%. So surely positive recoveries coming in from the banks and NBFC space as well. Real estate space, we had Sobha, which had come out with its Q2 update. In a real estate space, which has been going through a tough time even before COVID, and right now it was absolutely one of the sectors which was affected. So good performance achieved by Sobha in such a despite the lockdown, such a tough time is very positive, and the management has also given a very positive, strong forward-looking guidance. So surely signs of recovery we are seeing here, a rebound over here, that even in the tough time they managed to perform well. Suntech Realty also saw a substantial growth in its pre-sales, up by 98% QOQ and 96% YOY. So surely very positive signs coming in here from the realty space also, and recovery is also showing good signs. Now, in pharma space, Thyroke also gave a very strong Q2 update. The revenue in Q2 was seen an increase of around 37% on a year-on-year basis. Positive signs here, recovery shown, good recovery, strong performances by this company, and this is across broadly most of these sectors are covered here. So positive influence, positive indications that we are seeing some signs of rebound, we are seeing some signs of recovery coming in from these companies, and we'll all watch out for the final results which will come on Q2 FY21 for all these companies.